who post articles on Substack or Medium. They just have some quality content. So if you see this content coming up over and over again, just make note of it because it is extremely important, and I'll make sure that it's still relevant at the time you see it. So where are we right now in the market? So clearly the market is fairly bearish. It's been pretty bearish. Some people are saying that the market has been in a bear trend since about May of 2021. So we're almost a year into the bear market. And that's when Bitcoin hit a high of 64K, and it basically plummeted down about 60%, down to about 29K. And people are wondering, well, you've seen it's been a year of a bear market, but at one point Bitcoin did go all the way back up to 69K. It actually put in a new all-time high. Well, that's true. It did put in a new all-time high, but the volume wasn't actually there to support that all-time high. In other words, there wasn't a lot of new money coming in. It was more money being moved around. And when I say that, it's money moving to stablecoins moving to altcoins, and then those altcoin money, the money and profit moving back into the main coins, which are the two blue chips, Bitcoin and the top blue chip, Ethereum. So normally what you want to see when you have new all-time highs is a spike in volume, because that shows that we have new money coming in. And if we go over to this chart here, you can see that that is represented here, where we saw a all-time high here with Bitcoin, and we sort of saw it level off, and then we saw the price drop, and then we saw this other peak here, but the volume, as you can see, was well below the average, and it just wasn't there to support it. And that's why we didn't really spend that much time here in the $60,000 range, and we were kind of struggling to get back up there. So it's unfortunate that we are in the States now, because everyone loves to be in a bull market, because a bull market is a time you can basically throw money at anything and you watch it 5x, 10x. But unfortunately, in a bear market, things are a little bit different. You got to be a little bit more strategic with your moves, especially since the sentiment is really bad. When prices tend to drop, there's a bit of a double whammy effect, where they see the price dropping kind of fulfilling it's a self-fulfilling prophecy in which the assumption is that prices will continue to drop. So and as opposed to a bear market, anytime someone sees one green candle, everybody jumps on that, and see that's kind of what happened here during the bull run that we saw start in late 2020. So it's unfortunate, but this is kind of where we are now. Been here for almost a year, and we're all still here. So for the majority of us, we do love the tech, quote unquote, love the tech. But a lot of us, we do want to make some money. We want to potentially make life-changing money, and we know that it is possible with cryptocurrency to do that. So what are some of the things that we can do to take advantage of the cryptocurrency market, not just during a bull market, but during a bear market? And many people have the exact same thought process. And those who are the ones to usually capitalize that are the big players, the whales and the market makers. And they do that during a bear market, specifically by assessing what the current narrative is going to be, and then putting their funds into that narrative so they can maximize their gains during a bear market. So what is a narrative? A narrative is basically like an underlying idea of what the current, let's say, for lack of a better word, trend would be in the crypto market. So there's a chart here that kind of gives you an idea of what represents a narrative. And everybody knows NFTs. NFTs, to somebody who doesn't invest in crypto, might just be NFTs. They don't really need to know anything else. But when it comes to people who are invested in crypto and do own coins, they see NFTs as something as completely different. And then when you're at a certain level of crypto, you see NFTs as a narrative, as an opportunity, as basically some more tech that is related to crypto and provides an opportunity to, essentially make profit and make those who are participating in it a lot of money. And NFTs have gone to show that the narrative has sustained. NFTs have been out for a while. They've gained a lot of popularity. They're very popular within mainstream media. We have a lot of celebrities participating in NFT. It doesn't really mean that they know what the hell NFTs are, but some people just think NFTs are just art. But we know that there's so much more when it comes to NFTs. But to those, NFTs are the be all end all of this world. But for us, we see it as just another arm of this great thing that we call not just crypto, but decentralized finance. Because to me, crypto is just a synonym for money, where decentralized finance is the entire it's the entire cryptoverse all into one. And crypto being just one arm of it, crypto being cryptocurrency, and then NFT just being another. So that was the idea for some time, that NFTs were the next big thing, and it was, and people made a ton of money. For the most part, it's the people who usually mint the tokens and are participating in the primary market that will tend to make the most money. But there are still some people who can make money off of the secondary market, and it's usually when the projects they start to traction a lot of popularity, and in that case there's usually the snowball effect in which the NFTs can become worth more. And you've seen that with, for example, the Bored Ape Yacht Club, which is probably one of the most profitable NFTs. It's tested it's withstood the test of time, and it has, I think the floor price now for each individual NFT is somewhere, I think it's like 90 Ethereum. For I think that's the lowest price you can pay for any Bored Ape Yacht Club NFT is 90 Ethereum. So it wasn't always 90 Ethereum. Okay, it wasn't. At some point, it was worth probably only a few Ethereum. It's probably not even worth that much. I don't have the chart right in front of me, but I can tell you that they weren't minted at 90 Ethereum. And people got really lucky. Some people paid next to nothing for it, and they diamond handed all of their NFTs, and they were able to sell it for hundreds of thousands, if not millions of dollars. And what happened? If you were to go on OpenSea today, you would see that there are many similar types of NFTs, similar to that of Bored Ape Yacht Club. I've seen some that are called like Bored Dog Yacht Club. I saw Bored Ape School Project, and all these other NFTs that are sort of like Bored Ape Yacht Club, but not necessarily that, because we all know that they're just not the same thing. But what it shows is that people are trying to take advantage of this narrative. They see that there is an ongoing trend. They see that people are capitalizing, and they see that people are making a ton of money. So they want to be part of it too. They can't own Bored Ape Yacht Club because they can't afford it. They can't create Bored Ape Yacht Club because it already exists. So the next best thing they can do is try to create the next Bored Ape Yacht Club. Not that easy, but some people are more successful than others. But that gives you the general idea of how these narratives work and why they're so attractive. Because if you're hearing about it, it's probably because it's profitable. Like if you heard about it on crypto Twitter, or if you heard about it on Reddit, it's probably because within the crypto world, it's probably because someone made a lot of money from it, or several people made a lot of money from it. So clearly that becomes very attractive, and others try to capitalize on these narratives. And the market makers and the whales, they know this, and they knew this well before NFTs came out. In fact, there were probably a lot of market makers who were studying these narratives and saw that there is potential for Bored Ape Yacht Club to be very successful, and they purchased it at a very low price. And after purchasing it, they held on to it because they not because they were just necessarily diamond handed, but because they knew that this was going to be trending, and they knew that it was going to be very popular. And those who bought early and held on to it the longest were the ones who were able to make hundreds of thousands, and in some cases, millions of dollars. So we know now that there are different narratives, and we know that if you're able to capitalize on these narratives, you can make a shit ton of money. And we've seen in the past that not just NFTs were able to make people who were jumping on the narrative tons of cash, but look back in the summer of 2021 when dog coins were basically the you can essentially throw money at any type of dog coin. After Shiba pumped in April of 2021, there were several coins that were in the market cap of tens of hundreds of millions shortly after, because people were hoping to catch on to the next big thing, the next big narrative. And the assumption was that these dog coins, Doge, SHIB, and then every coin that came after was going to be the next big thing. And for a short period of time, it kind of was. You can pretty much put in $100 into the latest dog coin, and you were able to 10, 50, 100, and potentially even 1000x. It was a great time. It got so crazy that there were so many transactions in the Ethereum network that the average price to send a transaction on Uniswap was over $600 US, because the network was so congested with people taking advantage of every opportunity. When I say you can make money by throwing money on anything, I mean it. Like, it was the golden age of profit, to the point where those who were actually genuinely interested in the tech didn't like it because they weren't in it for the money. They were in it because they care about the tech, and they saw all these people making money out of absolutely nothing. And of course, we know that trading is a zero-sum game. So when somebody makes money, somebody else loses money, and they thought that, it wasn't necessarily good for the system. And one of those people who thought that the whole dog era wasn't good for the system was VB. And VB is Vitalik, who is the creator of Ethereum. And when he saw what was going on, he didn't like it. And what he did was he owned a lot of these dog coins. And I'm just going to pause right there. Someone's just putting out some feedback. I'm just going to have to friend. Sorry. All right. Okay. Sorry about that. Just I was getting some feedback there. So one of those people there was Vitalik, and Vitalik, he was a holder of a lot of these coins because there were a lot of these devs were sending, they were burning the liquidity by sending Vitalik the coins. I don't know where this started. There's a burn address for this. There's literally a dead and a null address that you can send cryptocurrency to if you want to burn it. And burning is the concept where once money is sent to that address, it's gone forever. There are no private keys accessible for that account. Therefore, the money cannot be accessed. By doing so, they were locking up the liquidity and showing that the project could not be rugged. And at some point, someone decided to send the liquidity tokens to VB, and and the assumption was, quote unquote, because VB will never rug us, because it's VB, he's a multi-billionaire. Why is he going to take the time to sell hundreds of thousands of dollars of dog coins and crash the coin and watch tens of thousands of people lose money? Well, that's exactly what he did. He was so annoyed with the fact that people were capitalizing on basically nothing, and he saw that it was a game of musical chairs, that he decided to dump all of his coins. He converted them all to Ethereum, which basically crashed the price of those coins. Dog Elon was one of them. SHIB was another one, and a few other coins. Anything that was related to a dog coin at the time crashed, and he took all that money and he donated it to the India COVID Relief Fund. And some people say he single-handedly saved the bull run by doing that. Now, in hindsight, he clearly didn't, because in May the price ended up crashing, and we are today where we are because the price has not recovered since. But many people were happy with what VB did, and there are some people who saw this coming. There were some people who saw that the narrative was about to end, that it wasn't sustainable, and those people are likely the same people who caught on to the narrative. Not always, but there's usually, if you're doing enough research to sort of get into the narrative, you're also doing enough research to get out of the narrative. And those people are the ones who maximized their profits and were able to sustain them because they knew when to get in and they knew when to get out. Got in at SHIB at X amount of fractions of a cent, and got out at still X amount of fractions of a cent, but 1,000, 10,000. I think at one point SHIB, I think at one point it was like 100,000 X or something like that. It was something really crazy. But a lot of other, and SHIB actually was able to recover for several reasons, but a lot of these other coins, they didn't. So there is a narrative, people got involved, and some people got really lucky and made a ton of money, and then some people lost money. So who were the biggest gainers out of participating in that narrative? Well, clearly the people who got into it as early as possible and people who got out. And there are also some people who got in late, but they also were able to get out early, and they made money too. Because when there's a narrative going on, you don't necessarily need to be first. There's a saying in crypto and just trading in general that the trend is your friend. And what that means is that it's pretty straightforward. When the price is going up, the path of least resistance is up. Now, a lot of people like to try to catch the falling knife and try to predict when the market is going to flip on its head and the price is going to reverse. But unfortunately, we don't have crystal balls. We don't know exactly when that's going to happen. And crypto is one of those assets that likes to do the opposite of what you think it's going to do. Just like a few years ago, we didn't think that a dog coin could have tens of billions, almost $100 billion market cap. We didn't think that. We thought it was a waste of time. We thought they were all jokes. And then all of a sudden, well, we believed it was a meme, and we only believed in the fundamentals. And then we got to the point where memes became fundamentals. So there are those who were early and were able to take advantage, but those who still participated within this trend were still able to profit. The common misconception is that once something has pumped, it's too late. That's not necessarily true. It might be late in the sense that the full potential of profit is gone, but there's always still some potential if you get in at the right time and know when to get out. So by identifying what the narrative is, even if you're a little bit late, it can still be very profitable. Now, don't get me wrong. There is a time where the narratives are just too far gone. If your friend who is a no coiner messages you on WhatsApp and starts to tell you about this coin, it's probably that likely that the coin has reached its top. If people who don't even participate in the decentralized finance world start telling you about the next big thing, they're probably just exit, and you don't want to be those people. So don't get me wrong. It's sometimes it's could be it's never too late, but it's also sometimes a little too late. And you're going to use, or as time goes by, you're going to be able to sort of assess when the right time to get in and get out of any of these narratives are. But to be the most successful, you want to be able to identify these narratives. So if I were to go online right now and type in, narratives, what the next narrative will be, I'll usually get a website that looks something like this. You can see this one's called Seeking Alpha. I've never been to this website before. It's the first thing that came up in Google. And you can see that there are recommendations of the top crypto investment narratives. My suggestion is to avoid websites like this. The reason is because to really be able to identify with the narrative, it requires lots of research, probably more research that's going to take up a lot more than what we see on this page here. For example, I believe that this guy is shilling maybe 2 or 3 or 4 different coins, yet I don't see much information. So to me, this is someone who probably owns these coins and is just trying to pump their own bags. That's the first assumption I get. Remember, we talked about certain people mentioning things to you and that potentially being a top. When I see a coin sort of mentioned on a website like this, I would assume that we're near the top, or it's not going to do much in the near future, because narratives they require work to discover. Now, it doesn't mean that every website's bad. If you know what you're doing and you're willing to do your research, you could come across certain people that provide some quality content. And I have a few people that I use myself when it comes to identifying errors. And some of these people you might know. But the first one is a gentleman named Ansem, and another one is a gentleman named, you're probably familiar with it. His name is Kobe. These are very popular people in the crypto the world, and they're great at sharing information. And they actually have 2 really good articles here that I'm going to be sharing with everybody that they can go back and read. And I have shared these articles in the past, and they've been very helpful for most people. And I think that by following some of the rules within these articles, I think you can be very successful at identifying these narratives. So this is one of Ansem's older posts, but the reason why I bring it up is for the sake of this this class here, we're going to focus on the L1 narrative. So if you go back to here, we see this is called Ethereum killers. That was essentially the layer 1 protocols. So examples of layer 1 / Ethereum killers would be Solana, Cardano. Some people don't argue that Cardano may or may not be. Harmony, Phantom, Avalanche. These are all coins or networks that essentially do the same thing as Ethereum, but differently. And one of the ways that they're easily identifiable or differentiated is people will say, well, X network has much lower fees, or X network has lower transactions. Now, if you remember the last time we did this, we were talking about sniping coins. We looked at BSC, Binance Smart Chain, and Ethereum, and we saw that BSC was basically just a fork, just a clone of the Ethereum network. So a lot of these layer 1s don't necessarily do things differently to the point that they are completely groundbreaking and new projects. They tend to sacrifice something in exchange for something else. So they might, well, you can sort of generalize it as they centralize some level of decentralization for faster transactions or for lower transactions. and people find that very attractive, and they tend to take their business to these chains. But a lot of these chains, they all have the same thing. They have their decentralized exchanges like Uniswap, and I think which is on the Ethereum network, and then some of them do participate in several different chains. But then you have PancakeSwap, which is the Binance Smart Chain, and then you have Trader Joe, which I believe is Avalanche. I believe I don't use Avalanche, but I'm pretty sure that's it. But they all kind of do the same thing. But yet they all pump at different times, and they have their moments. And a lot of it does have to do with the media attention, the crypto Twitter attention that these coins get. Problem is that that attention only arrives after the coin has pumped. And it doesn't mean that you can't make money jumping in after the fact, but you're not maximizing the potential by getting in as early as possible. Now, we talked about whales and market makers being the one to capitalize on these opportunities more than others, and it's true because there are many people who can make money during a bull market. In fact, almost anybody can make money during a bull market. But show me your profits when the market's bearish. Then I'll know you're a good trader. Then I know you're a good investor. When the overall trend is down and you're able to produce profits during that downtrend, then I'll consider you a good trader. But if you're just making money in a bull market, anybody can make money in a bull market. And the old saying goes with the bull market is that a bull market can make you money, but a bear market will make you rich. It will make you filthy rich if you know what you're doing and if you're patient. Okay. So, if we remember when we went back to that example of Bitcoin having that double top, we'll just call it a double, or I won't call it a double peak. I'll call it maybe a local double top because I don't want to be very bearish with this conversation. Say that for another time. But we talked about there not being a lot of volume to sustain the price increase, and that's true. But yet coins were still pumping at that time. So what that means is that while money is not necessarily being injected, well, money's still being injected, but mostly at this time to NFTs, which has sustained growth ever since 2020. Out of all the assets, NFTs have had a steady growth, but not every cryptocurrency has. And money is more or less being moved around than it is being injected. In fact, in some cases, money is being siphoned out. Money is being converted back into fiat, and that's probably one of the worst things that can happen for crypto because, that's just removing the overall total market cap, and we don't want that because we want money to move around and flourish through several projects. So, just 1 second here. Just want to close this out. So the market makers and the whales, they will take every opportunity they can to make as much money as possible, even during a bear market. The end game is still, for the most part, to accumulate as much Bitcoin and Ethereum as possible, because as we saw with the dog coins, and as NFTs are still pretty sustainable, so I won't bring that. But other certain narratives, they're not. They may not be sustainable. When we take layer ones, for example, like Luna, Matic, Solana, all these coins, they are going to have a hard time surviving in a world that only needs pretty much one of them. They might do well in the short term, but in 5 years from now, they all can't be here. So it's not as sustainable for the long term. So eventually, people need to get out, and we don't know which ones are going to make it to the finish line. But the general consensus is that Bitcoin and Ethereum are likely to be here for the foreseeable future. And so the end game for a lot of these people is to gain profits, whether it's through any of these layer ones or meme coins or whatever, and eventually move their coins back or their profits back into Bitcoin and Ethereum so they can have sustained long-term growth. Because we might see Sol pump one day 20, 30%, 100% in a month, but then we can easily see it drop 70, 80% and never go back up. Whereas what Bitcoin shows us is that Bitcoin does trend up with time. We have a lot of people saying, bear market, bull market, this and that. But if you look at the macro scale of Bitcoin, it generally trends up with time. So as I mentioned earlier, the trend is your friend. The path of least resistance when something is going up is up. Not up only, but generally up. So the goal would be to capitalize on these narratives, make as much profit as possible, and then put their money back into Bitcoin and Ethereum. However, you don't have to do that right away. And a lot of these market makers, they don't do that right away. In fact, they participate in, you've probably heard this before in different fields, but they participate in what we call the money ball. And the money ball is essentially all that money that is using to pump these coins moving from one coin to another. And if you're able to identify potential narratives, and if you're able to identify where the money ball might be moving next, you can be one of those people that are able to invest in these protocols or whatever coin it is, and be one of those really early people. And if you're really good at what you do, and if you're really patient, if you have a lot of discipline, you can also be one of those people who get in really early and get out at the right time. And that could make you that can change your life. If the crypto, you're in this opportunity where the next NFT you buy or the next coin you hold could potentially change your life. You can't say that about a lot of other things. You can't There's not a lot of other things in life that can really, you know, turn everything around for you in literally a night or a week. But crypto can do that. And by understanding narratives and by following the money ball, you are really increasing your opportunity, your chances of doing so. It won't, discipline, all that stuff, hard work, it's still very important. And you're very unlikely to succeed if you don't have those things. But if you add it all together, it is a recipe for, some serious success in crypto. So these market makers and whales are market makers and whales because they have all that and they're consistent and they do it over and over and over again. And I hate to say it, but they take advantage of people as well by using people who are not as good as them, but they don't have the same discipline, they don't have the same knowledge, they don't have the same hard work, they don't have the same advantage of being able to research narratives and money balls and all this stuff. And instead, these whales and the market makers, they use them as exit liquidity. And what I mean by that is when people are getting into these narratives at the end, that is the opportunity for these whales and these market makers to sell their coins to them in exchange for Ethereum and Bitcoin so they can accumulate Ethereum and Bitcoin in the long term because as we mentioned, Ethereum and Bitcoin generally trends up in the long term, whereas these layer ones may not be. So unfortunately, that's the game we play. If you're losing money, it's because someone else is making money. If you're making money, it's because someone else is losing money. But that's trading for you. That's investing. It's a zero sum game. Okay. Now the goal is if you're going to play the game, try to be more like those market makers and try to be more like those whales. All right, so I want to go back to those articles for a second. There's a couple of really important points that are brought up, and again, articles like this, I would just throw them away. I personally follow only about 3 or 4 people on all of crypto, and then in addition to that, I have really good conversations with some of my friends that I know in real life about crypto, and I'm able to sort of build on that. But in this environment, I think less is more. And there's so much garbage out there, and there's so many people just trying to shill and make money off of you and use you as exit liquidity that you have to be really careful with who you're following and who you're getting your information from. But for the most part, I found some success with these guys. And this article was released back in October, and he was discussing the layer one narrative. Now, he didn't specifically use the word narrative, but he made some good points. So, for example, he says, one of the reasons I believe in L1 networks have outperformed all the other altcoins on the year because they're one of the easiest ways to make a bet on decentralized future of smart contract systems. Again, we know that Ethereum is successful in itself. And therefore, if coins can try to be like Ethereum, they are likely to be successful. We saw earlier that coins, because SHIB and Doge were so successful, any coin that had basically Inu, there's a few other ones that had that name attached to it, was likely going to do well in the short term because people just believed that they were the next big thing. They were the next, narrative. There's another comment here. As ETH outperformed BTC on the year, other L1 networks like Solana, Avalanche, Luna, Phantom, and Harmony have also outperformed Ethereum by a large margin. Okay, and we're going to get to that in a second because we have a chart that actually shows this stuff in real time. So with this in mind, I believe your base currency should be Ethereum and your trading should focus on outperforming Ethereum. That's a very good point as well, and I'll get to that in a second. And he talks about currently market leaders are Sol, AVAX, Luna, FTM, and One, varying multiples of 5 to 10x, all while Ethereum hasn't broken any all-time high. So clearly there's something going on here. If these coins are all pumping beyond, not in correlation of how the market's doing, because when Bitcoin is bullish, anything can pump. Remember we talked about that. When Bitcoin's in a bull market, anything can pump. But these coins particularly tend to pump even when the market is bearish, because the market's been bearish since May of 2021. But yet we're in October and we're seeing Sol, AVAX, Luna, FTM, and One pump. But there's no FOMO. There's no new class of crypto. What's going on? And this is what I'm talking about. It's these market makers and these whales moving their money to certain coins and then using people as exit liquidity, and then moving on to the next coin, and then doing the exact same thing over and over again. And if that sounds messed up for you and you can't handle it, then maybe you should exit crypto, because there's a lot of worse shit that goes on than that. If you can't even handle that, then this game's not for you. But that's exactly what happens. And if you can't beat them, you might as well just join them. If you're going to play this game, you want to be as successful as possible. So particularly, we're talking about these layer ones here. I think he goes on to talk about a few things, other times where we saw pumps like this. He says last year we had the first DeFi summer, which is when platforms like Aave, Comp, and Uniswap and others became really popular. Perfect example, because when decentralized exchanges were starting to come out, there was a few of them. But we all saw. I don't use anything. I mean, there's SushiSwap and Uniswap, and there's a few other ones, but I believe that Uniswap would be the largest decentralized exchange in the Ethereum network, and I believe that SushiSwap would be right behind them. But in the DeFi summer, there was all kinds of protocols that tried to be just like them, and that was a narrative at the time. And you can invest in a lot of those coins early on, and you can make a ton of profit off of them. But in the end, it turned out that Uniswap would come out as the winner. And you can see that they also outperformed a few other coins. And then, of course, it goes on here to talk about NFTs. Now, this came out in October. NFTs have been pretty strong throughout 2020 and 2021, but he goes on to mention that some of his comments on NFTs. And he goes on to say, I'm curious to see if this trend follows to other alt L1s. So he brings up a very good point here. And this is a good example. We were talking about identifying narratives. All right. So doing your research and trying to wonder where the money might go. And before we get to that, here's a perfect example right here. He says he's talking about NFTs, because we all know NFTs are mostly ERC 721 tokens. So the ERC, they're part of the Ethereum network. But there are NFTs in other layers, other layer one, sorry. And if you're able to identify, for example, if NFTs are becoming more and more popular on the Avalanche network, what does that tell you? It tells you that it's possible that Avalanche AVAX could pump, because you need AVAX to do business within that network. If anyone's unfamiliar, try to make this as entry level as possible. Solana, Phantom, AVAX, they all have their own native tokens. And Phantom has FTM, Avalanche has AVAX, Solana has Sol. It's pretty straightforward. Ethereum, these are the coins you need to pay the fees to conduct business. And for the most part, they are usually the base currency in all trading pairs within that network. Now, AVAX, or other coins within those networks might trade against other base currencies on other networks. That's when it's cross-chain, whereas a coin can bridge from one network to another. So it doesn't necessarily only have to be on AVAX. And the two most common bridges are the Binance Smart Chain and Ethereum, whereas you might have one coin, but it functions on both networks. But that's not always the case. Sometimes if you want the coin, you have to get it only on that network. So if you see a trend emerging, for example, whether it be the new type of dog coin or whether you start to see NFTs start to pump in a certain network, that can be an indicator of a shift of the money. That can be an indicator that a new narrative is starting to emerge. It's research like that and it's information like that that'll guide you and help you identify before anybody else that there could be something emerging. And again, you want to get in as early as possible. And earlier we talked about this, what kind of some of the advantages that these L1s have. Solana and AVAX follow many cheap that allow for many cheap microtransactions and high transactions per second, should have an advantage here as game developers enter the space. That's true, and for the most part, that's why a lot of people choose to invest into these coins. And again, you're going to see in the example that we're going to go over that how these layer ones pump, and you'll see that there is correlation between them. They may pump at different times. So narratives, the best way to look at it is narratives kind of pump everything at the same time a little. Like, think about the biggest narrative, the most impactful narrative is Bitcoin is bullish. Think about it like that. That's a narrative. Bitcoin is bullish is a narrative because it instills euphoria and greed in the market, and therefore other coins will pump when Bitcoin pumps. And we're going to look at examples of when Bitcoin is bearish and bullish and the impact it has on other coins. But consider that like the master narrative. And that's a perfect example. And when you see coins like Solana and AVAX pumping, it's likely that there's something behind it. And what he mentions over here is he talks about the microtransactions and the high transactions per second. And that's one of the valuable assets that these networks have. So this is Kobe. A lot of people are familiar with Kobe. I watch his YouTube channels. This guy's awesome. He's great. I also like him because he picks on people who are trying to pick on newbies. So there's a lot of YouTubers out there who like to shill certain coins, but they don't have your best interest in mind. These people are getting paid to post videos of X shitcoin and Y shitcoin, and they've already purchased. I mentioned this before. I've done my research. There are a lot of big names in crypto right now that would shill coins. And if you know what their wallets, if you can watch their wallets in the network, you can see that a lot of the time they buy a coin prior to talking about it on their streams, and I don't like that. And when I saw Kobe come out with his his opinion and his pushback against those who try to take advantage of people within the crypto network, he got my attention. I started to read his articles, and he brings up a really really good point in this, and he's talking about when identifying the narrative, knowing what the best narrative is and how to play it. So some people here might play video games, some people might not. If you do play video games, it's likely that you play some of the more modern ones. So, for example, you might play Dota, you might play League of Legends, you might play Call of Duty. These are all very popular games. You might play World of Warcraft, to each their own. But you'll know that if you're a gamer, that when you're playing the game, you want to play it as well as possible, to the point that you're a master at the game because you're playing to win. I know a few people who actually play to lose. Sometimes people say they play for fun, but that's great. Sometimes games can be fun like that, but for the most part, with the games that I mentioned, we play to win. And to win, you want to have the best odds. You want to have the best opportunity possible. So how you're going to do that is you got to do research. You got to know how to play the game. And the game might have its own tutorials. A game might give you an idea of how to play. It might show you what buttons to press. It might show you what to do next, but it's not necessarily telling you how to be the best at the game, because these things usually come after the fact. Look at speed runs, for example. If you're watching any type of speed run on YouTube, you'll see that that's not how the game was meant to be played. But yet some people figured out after the fact you can play the game this way and beat it 99 with a time reduction of about 99%. It's absolutely insane. But we use that analogy and we talk and we consider the crypto market, where the crypto market, it's basically just buying and selling at any given time. Every time there's a buy, there's a sell. Every time there's a sell, there's a buy. But there's a way to do it really, really well. And by doing it really, really well, you can win more often than you lose. And what he talks about here is doing the research so that you can come up with what's called the meta. And again, if anyone here plays Call of Duty, we always talk about meta guns or meta this and meta that. Meta would be the best at any given time. So what does that tell you? It tells you that the meta is not static, it's dynamic, it changes over time. What was meta last week might not be, and we're talking about meta, we're not talking about metaverse. So what was meta last week might not be meta this week. What's meta this week might not be meta next week. So it's on us as traders to look into the information that's available to us and try to identify what the current meta is and what the next meta could potentially be. But also, he mentions here another important thing to assess is why the previous metas did not or lost their pump, and they lost their they just weren't sustainable. Why? Why is that? What flaw was in that meta at that given time? What flaw was in that narrative that it was no longer sustainable at that time? If you're able to identify that, if you were able to identify that, you were able, remember, as we mentioned, to get in as early as possible, but also exit when the time is right. So this is where research comes into play. You want to make sure that you're taking the time to learn why these coins are potentially pumping, or why they or how they may pump in the future. And that requires reading white papers, that requires being part of the Telegram communities, that requires being part of the Discords, that requires just talking to people who know what they're talking about and who spend a lot of time just sharing information with others. If you spend the time, you can identify why these things are valuable, because there's two types of people when it comes to the meta. There are those who learn what the meta is and then they just do it. So for example, there are people who play, we'll bring up Call of Duty again, and they'll just Google best guns to use, best guns to win. And by doing that, they're going to change all their guns in the game and they're going to be pretty good. But then there's the other person, because don't get me wrong, by just adopting to the meta, you're going to do well. If you just start, remember how I said the trend is your friend? If you just buy these coins that are pumping in the short term, you're likely to pump along with these coins because the path of least resistance is usually up, right? So if you're able to identify it and do your own research, you will understand why the meta is the meta at that time. And you, by knowing that, you're at a much better position because you can still take advantage of using the meta, but you're also, because you know how how the meta works and why it's the meta at that time, you can see when it's no longer sustainable. You can see, well, the reason why this meta is no longer there. And you see it, you identify it, and you leave. And what do all the new people do? That all the people who got in there just because they saw the price pumping, they don't get out because they saw the price, because they got in when the price was pumping, they're likely to get out after the price starts dumping. So there's missed opportunity on both sides now. They missed the opportunity of being in early, and they missed the opportunity of getting out early. You want to be early, and by understanding how these narratives are narratives, and understanding what makes a coin, and doing your research, and not just aping in to any coin that you hear about, I promise you, you will be a lot more successful than just copy trade. And he goes on to make a couple other points here, and all these articles will be shaved. He only says, I think for some market participants, simply following and changing the metagame is good enough. That's what I mentioned when some people just basically copy the meta and they take advantage of that. And then he goes on to give some examples. And I like this one. I kind of mentioned this earlier with Ethereum. Ethereum doing well allowed these other layer ones to do well. Doge and SHIB doing well allowed other dog coins, for lack of a better word, to do well. And again, when you combine that, being able to identify these narratives and then understanding why they are narratives, it puts you at a great advantage over what I will say. There's a bell curve, and you would be at, I would say, it's hard to say, but 80%. Just shoot that number out there. You'll be 80% of the market. You'll be better than, okay, because for the most part, people are just, they say 99%. What is it? 90% of traders lose money. Then what if that's the case? If that's a traditional stock market and 90% of traders lose money, holy shit, how many people in the crypto market lose money? You know what I mean? It's insane. So being early, getting in early, getting out early, doing your research, understanding why coins are winners and why they became losers is essential, in addition to hard work, to putting in the effort, to taking time to understand why these coins work. Uh, this isn't always the case, but sometimes, if I mentioned this earlier, identifying a top when your no coiner friend calls you and starts talking about, hey, Santa coin, or like, hey, I heard there's this new coin called Floki Elon Baby Doge. Like, should I invest in that? Probably not, because that coin is probably already pumped. They saw it go up 1,000%. Now the whales are just waiting to to dump on them. So really important to do your own research. All right, so we talk about the L1s a lot, and talk about some of the people who we can follow. There's another article here I mentioned a few times, identifying when to get in. So we know, let's say, those who are early are very lucky. They were able to do the time. Well, no such thing as luck. They say luck is preparation meets opportunity. So for the lack of a better word, I say luck, but luck is essentially the definition of preparation meeting opportunity. Okay, so those who did their research and those who identified the narrative, they got in really, really early. Okay, they got in, let's say, around here. All right, but let's say you got in over here. There's an article here that sort of helps you identify to how to accumulate during these upward trends. And what I mentioned earlier is that many people will shy away. They'll be like, oh man, like they're right here. So I hope you can see my mouse. They're like, man, the coin is already pumped. There's no way I'm gonna jump in now, because if I jump in, it's just waiting to dump. And then you can see a small dump. And then all of a sudden it's like, see, I told you it's done, boom, panic selling. But then look what happens. And how many times were we in a coin where we bought in, we jumped in on the narrative, and the coin started to dump a bit, and then we're just like, screw it. There's no way this coin could continue to go. These self-fulfilling prophecies and these assumptions and these, don't be deterministic. When it comes to this stuff, don't be deterministic. Your best friend is information. Your best friend is knowledge. Your best friend is doing the research. And you can see that there are opportunities, several opportunities, even if you're not early, but several opportunities to make money on these coins. And I'll share a link which will show you when and at least guide you on the best times when to enter and exit those trades. Because in theory, we get the idea, okay, enter early or exit early, but this puts you in a hands-on position to actually know when to buy and know when to sell, and by using actual technical analysis. And that's the next thing we're going to look at, is the technical analysis of those specific coins I mentioned. So we talked about those layer ones. I don't have every single layer one here, but I have some of the more popular ones. Now, there were other coins that pumped during this time. Some of you might be wondering, well, where's BNB and where's FTM and stuff? Just for the sake of this, for simplicity's sake, we're going to just omit those. And we're only going to look at Solana, Matic, Luna, and AVAX. And we're also going to look at Bitcoin because Bitcoin, like I said, is the grand narrative. When Bitcoin is bullish, other coins tend to be bullish. And when Bitcoin is bearish, other coins tend to be bearish. So the first thing I want to point out is just what a couple of these lines mean. When you're looking at the yellow line, this is the time Ethereum pumped. I don't have Ethereum on this chart, but I have it over here. Fortunately, I would love to have two charts at the top and four at the bottom, but TradingView didn't allow that. But instead, I can use this chart right here, and you can see that around even back to September there was a substantial pump, but around January there was a huge gain in Ethereum. Okay, like look at that, we saw 100% in 2 weeks, almost 100% in 2 weeks of Ethereum. Okay, so that yellow line is represented on this is a weekly chart. All right, and that yellow line is represented right here on this. So January the 4th. It could have been a couple of days earlier than that because it's a weekly chart, but we're going to focus solely on the weekly chart here and January the 4th. And these blue lines and these red lines represent the times that Bitcoin got bearish and the times it became bullish. And I'll explain it briefly. Many of the times we do this, we talk about this is created by Ben at Into the Cryptoverse. That's his YouTube channel. I'll include a link with that. He talks about the bear market support band, which is essentially just the 20-week SMA and the 21-week SMA. And historically, by looking at that data, every time Bitcoin is above the 20-week SMA, it tends to be bullish, and when it drops below the 20-week SMA, it tends to be bearish. So what I did was I added these red lines so you can identify the time when Bitcoin gets into bear mode and the time when it goes into bull mode. And you'll notice here that I have two lines here. There is an initial bull phase when Bitcoin gets above the 20-week moving average, but it's also extremely, extremely bullish when Bitcoin comes down to test the 20-week moving average and then continue to rise up. So if you look historically, we see here that we'll start from more recent and head back. We are in this current bear trend. As you can see here, what happened? Bitcoin fell below the 20-week moving average. And remember, this stuff isn't painted after the fact. If you're wondering, like, wow, it's pretty accurate. Yeah, Ben, and it's the Cryptoverse, he has a PhD in nuclear engineering. This is what he does for fun. So you can see here that the price of Bitcoin dropped below the 20-week moving average, and then we were in a downtrend. What happened here on December 27 is it came up to test the bull market support band, and it failed. It tested it positively in a bearish way, but it was not able to break the trend, unfortunately. And for that reason, we are still in a bear market. But if you go back a bit, if you see here, we came down, we fell below the 20-week moving average. We almost came up to test it. We came up to test it, and then we survived. We got over it, and the markets were very bearish, and bullish, and we came down to test it, and then markets got extremely bullish. So the two lines here are correlated at the bottom charts here. So you can see what happened to Sol. And I'm going to get to this green line in a minute. I know a lot of you are looking at it, but if you look at Sol here at the blue line, it pumped. If you look at Matic here, it didn't really pump. If you look at Luna here, it pumped. And if you look at AVAX here, it pumped. That's because when the big narrative, which is Bitcoin being bullish, is the current narrative, all these other coins tend to pump as well. Something I want to point out here is that these bottom charts here are reflected in the Bitcoin valuation and not the US dollar valuation. And if you're wondering why, it's because all coins are traded in most exchanges with a trading pair, and the base currency is often Bitcoin. So what that means is that if the coin has no buys and no sells, but the price of Bitcoin goes up, the price of that coin will go up because its base currency on the exchanges will go up. So in other words, if Bitcoin goes up, usually the price of these coins will go up. If Bitcoin goes down, usually the price of these coins will go down. 9 out of 10 times. There are some exceptions, and some of the exceptions are going to be listed here, but that's generally the gist of it. So to get a better idea of how a coin is performing, it's always best to look at its Bitcoin valuation. And in some cases, especially with DeFi coins, you want to look at the wrapped ether valuation. And that's what we have here, and that's what we're going to focus on. And of course, Bitcoin here at the top is the US dollar valuation. All right, so let's start. So we know that these red lines are going to be bear phases, and we know that these blue lines are going to be bull phases, and we know that the yellow line over here is when Ethereum started to go crazy. All right, so these green lines here are when this coin started pumping, and we're going to start with Solana here. So Solana actually started pumping or got a green candle right before the initial Ethereum pump. Now, keep in mind that these are all layer ones. All right, now the narrative has now slowly starting to shift now because Ethereum is doing well. Ethereum is a layer one, so therefore, or maybe other layer ones will do well. And we start at the green line here, and I stopped. I could have kept going up, but what I did was I stopped at this line here because this is kind of where the trend slowed down. So what I did was I stopped at this orange line. Okay. Now, if you look at the Bitcoin chart, yeah, there was some stagnation there, but it kind of still went up for a couple more weeks. So it just seems like, Solana just started to slow down here. So what we're going to look at is basically the money ball moving from these four coins. Solana had a 19,000%, sorry, 1900%. That's approximately 20x. As 100% is 1x, so therefore 1900x would be 20x, not 19x would be 20x. It had a 20x gain. How big is the 20x gain? I mean, you might be thinking, oh, if I put $100 in, I would have made $2,000. You're right, but the majority of whales and market makers don't trade like that. They trade on something called perpetual futures, where they put in $10,000 and they put it on 10x leverage and they're trading $100,000. So do the math. That $100,000 can easily turn into $2 million in a span of, I believe this was, what is it, 3 months? So you can see if you have the capital, how profitable knowing when these things are going to pump can potentially be. So we saw the green marker here and at the orange marker, we saw 1900%. But let's look at the other chart. So while I'm moving around this orange mark here, I want you to look at the Matic chart. What happens? Look, Solana levels off, and then what happens to Matic? Matic pumps. Matic is pumping. Matic was flat. Keep in mind that we had the Ethereum pump here. Everything pumped except AVAX. No one even knew about AVAX is just doing its own thing. That's the exceptions. But for the most part, we saw here that everything kind of pumped when Ethereum pumped because that was the general narrative. But Solana stopped pumping and and Matic pumped. Why is that? Because a lot of the money left Solana and pumped into Matic. Again, what did we say earlier? This is a bear market. What does the volume tell you? It tells you that there isn't new money coming in. This is money being moved around. And these are we're talking about millions and millions and millions and billions of dollars actually. Sound down for millions and millions and millions. Okay, a lot of money is being poured into these coins from other coins. Billions of dollars, enough to move the price of these coins. And you're seeing it right here. You're seeing the Solana pump end and then the Matic pump start. We had a 1900% increase there. We had a 900% increase there. We move to the orange mark. The orange mark happens. We flatten off. Now look at the Luna chart. What's happening to Luna? Orange mark, and now all of a sudden Luna's pumping. Is that a coincidence? You tell me. So we're here now at Luna's orange mark. And then what happens? Now, keep in mind that we have these blue marks here. So even when Bitcoin became extremely, look at this, Bitcoin became extremely bullish with this blue marker, but yet the price of Matic dropped. How is that? Why? Bitcoin, you're testing the 20-week moving average. Why the hell would this coin dump? It's because so much money was moving out of it and it was going into Luna. It's because this pump that you see here was a small group of people pumping this price. It wasn't because Matic did anything special. We already talked about that earlier. Matic is not that special. All these layer ones are not that special. They just do things a little bit quicker and a little bit cheaper at the expense of decentralization. All right. So what's happening here? It's a small group of people. It's these market makers and these whales that are basically manipulating the price by using their billions and billions of dollars to pump these coins one at a time. And you can see here that when the price of Matic stops, keep in mind these are all weekly charts. As soon as the price of Matic stops, you have a pump of Luna. And it even goes right through the bull phase. And you're wondering, well, the price was bullish again, and the price didn't pump is because the money ball is at Luna. Screw Bitcoin, screw Ethereum, screw Matic, screw Sol, screw AVAX. The money is at Luna. That's where you're going to make your money. And then what happens here is the price drops off. Now, again, no indication of bearish, no indication of bearish sentiment because Bitcoin just tested the 20-week moving average. And historically, look what happens when Bitcoin tests the 20-week moving average. It shoots up. That's literally why the majority of you are here today, is because you jumped in during this bear phase, which was kicked off when Bitcoin bounced off the 20-week moving average. But yet, for some reason, and I know I'm just trying to drill it in there, and just to let you guys know, this is not a coincidence. For some reason, even after Bitcoin was able to test it, the price of Luna fell. Why? The exact same reason why the price fell on Matic, because these select people moved their money from Luna to another coin, and that coin, based on the data, looks like it was AVAX. Now there was a bit of a gap in between. Anyone can hypothesize why there was a week of a difference in between the drop of the coins. But it could be that some money goes into Bitcoin and comes back out. But you can see here that as soon as the drop happened, a day after, we start to see a pump in AVAX. Now, while AVAX is pumping, look what's happening to Sol, and look what's happening to Matic, and look what's happening to Luna. Nothing. Flat. Flat. They're flat at a time when Bitcoin is putting in new all-time highs. It's flat because the billions of dollars that was injected into these three coins early on is the same billions of dollars from coin to coin to coin, using new people as exit liquidity so that they can pump their bags and so they can make profits. And you can see here that it happened in all four coins. Regardless of what Bitcoin was doing, these guys knew what to do. They don't give a shit if the market is bullish. They don't give a shit if the market is bearish. All right. They know how to manipulate the market. So again, if you can identify these trends, if you can get in early and know when to get out, know when let's see, what would be an indication? Here's a good example. What would be an indication of when to get out of these coins? Well, if you see that Matic is starting to drop off and then the next layer one is starting to pump, it's probably a good idea to get the hell out of Matic because it looks like the money ball is shifting. You don't even have to go into Luna if you're unsure. You're just better off just getting the hell out of Matic. And what do we see here? We see what we call diminishing returns, and diminishing returns are extremely important. One of the terms that you want to get used to, which I will mention in several occasions, especially when you're looking at technical analysis, every time we're identifying Bitcoin charts and Ethereum charts and etc., we're going to talk about diminishing returns because Bitcoin and the crypto market in itself has diminishing returns, and that is where the volatility or the gains or the losses tend to diminish over time. Now, what happened here? We saw the gold mine, which was Sol, go 20x, where you can turn $200,000 to $2 million. And then we saw a 900% increase. Then we saw a 500% increase. Then we saw a 200% increase. Why? Because people catch on. People like me, like you right now, we all learn about the money ball. We all learn about the narrative. We all learn about the strategy. And what happens is we all start to jump in. And then when you start to jump in, you're no longer early anymore. And that's why you have diminishing returns because it's not, as time goes by, it's not as profitable. My buddy Asher showed me a long time ago that one of the best, easiest ways to make money in 2018, 2019 was just to watch the crypto Bitcoin options market because there's so much volatility on like the last Friday of the month because that's when options expire. And you can literally look at the chart and you can see the amount of volatility on the Friday for 6 months straight, and the volatility just got smaller and smaller and smaller and smaller because people were starting to catch on. Now, keep in mind, you're probably thinking like, oh shit, did I miss it? This is just one narrative. This is just a layer one narrative. I didn't even want to get into the metagame, the P2E, P2 play to earn narrative, which is like the gamify, however you want to pronounce it. That is a whole nother narrative that kind of took place around the same time as this. But these are just examples because when we go back to the initial chart here, there are so many opportunity. And just like the money ball rotates within the layer ones from coin to coin to coin, so from Sol to AVAX to Matic, etc., the money ball also rotates from narrative. And this is a perpetual game that takes place in the stock market, takes place probably in the Forex market, more with governments and sovereign states manipulating it. But when it comes to crypto, this is the game. And if you're able to get the meta in this game, you can be extremely, extremely, extremely profitable. It's going to take hard work. It's going to take motivation. It's going to take a shit ton of time doing research. and knowing what to filter in and what to filter out. But there's so much opportunity here. And just because one time Ethereum killers was the narrative and then it was no longer the narrative, and let's say, gaming became the narrative, it doesn't mean that the narrative cannot, the money ball cannot shift back to Ethereum killers. For example, SHIB was really big in was it February, and it was in January. It died in February, came back to life in May, then sort of like leveled off, then just shot up like crazy. I think it was just before the fall, like in the late summer, where SHIB had a I think they went up like 20x from where they already were, where the market cap went up to 60 or $70 billion. So people thought that it was dead, but it wasn't. It just took time for the money ball to rotate back, because everything I told you today about these people who capitalize on moving the money ball from these layer ones to layer ones and game coins to game coins, they do take part in the in decentralized finance coins such as SHIB and those types of coins as well. But those assets are a lot riskier, so you don't see as much volume in those assets. But if you're able to apply it to a centralized exchange and centralized assets, the same concept applies to the decentralized assets. You can do it there as well. So, point is, you're never too late, in a sense that there's always some sort of narrative happening at the time, or there's one about to happen. So again, I want to stress the importance of doing your own research and taking the time to find out what accumulation patterns are, what the next narrative would be, and what the meta would be for that given time. Because if you are successful, I promise you, you could make basically life changing. All right, you guys still here? Perfect. All right, so that's pretty much it. A lot of information, but the good thing is all of it has been recorded. All of it is going to be available through links, and I'm going to stick around for a little while. And if anybody has any questions, whether it's regarding what we went over today or if it's something that you just want to talk about, I'm more than happy to do that. And as I mentioned this at the end of every call, at least for the meantime, until we get the metaversity established, if you do have any follow up, if you did want to message and get any whether it be advice, I'm not gonna give you financial advice, but whether it be trying to identify if something is or isn't a narrative, or my opinion on what maybe a current influencer might be, if something you should invest in and probably invest your time in or steer clear of, I'm more than happy to share that information. I'm always a DM away. I will try to get back to you right away. If I don't, just know I didn't forget about you. I'll do my best. So in the meantime, anyone has any questions, go ahead. I'm here. And you can take as much time as you want here, because I got nowhere. I'm already on my computer, so I ain't gotta go anywhere.
Glad I got my internet fixed just in time. It's like perfect timing. I was worried I was going to miss a class, but the class was awesome tonight. I really, really appreciate you doing this.
Yeah, we wouldn't have started without you though.
So I heard the little Easter egg there. If you can talk about it, you and Astro have been uh, speaking a lot longer than what I had realized, right?
Yeah, I mean, so that's we're talking specifically about the Elon One community. Yeah, I mean, I've been involved in that community for some time. For me, it's one of the projects that I'm still in because I think that they have a really strong community. One of the things that I initially invested in it, and what made me invest more into it was I saw that it had so many Telegram members and it had a large holder base. What that showed me, it had a really strong community behind it, and I got to know some of the people there really well. And I think that's how we met, right? We met in that channel as
Yeah.
well. So, but yeah, that was one of the channels where I actually spend most of my time. If it wasn't for them, I would not be spending as much time even doing this, because I didn't have the interest until I started to meet people like you and others in the Elon One channel, and then it gave us an opportunity to talk about things other than just the coin itself. What I learned from it was that there were a lot of people who just didn't know much about crypto, and I mean they didn't know much at all. So I saw this as an opportunity to sort of inform people so they can make the right decisions.
That's pretty cool. My sense of community came from them as well. Like the model I have with Kronic Katz is literally because of witnessing everybody in Astro Elon go and just blast the hell out of a Twitter post or show up for somebody. So they've
Yeah.
actually shaped a lot of what I've got going on here. So
Yeah, they're very resilient, and yeah, I like them. And I see some people are DMing me right now asking where to buy. Like, guys, I'll mention a name, but I won't give you financial advice. I don't want to tell you to buy something. I am personally invested in that coin because I like I said, I like the community, I like the people who are there. But whether or not you want to invest in that coin, whether it be for profit reasons or not, that's totally your decision. I can just give you as much information as possible, but I'm not going to tell you whether or not you should or shouldn't buy a coin.
so real quick, I don't think I've ever asked you how exactly do you find new token projects to buy? Like, do you actually actively look, or is there like a billboard
Yeah.
somewhere? Like,
I think I shared it last time, but I'll make sure that it's easily accessible. Again, it requires motivation and dedication to go out and seek this information. And I've been lucky enough to have some things shared to me by those. My success came from standing on the shoulders of giants, right? I don't come up with much on my own, really. I learn from others and then I share that information. Sometimes I build on it, but for me, it's just a combination of all this information and then sharing it. And a lot of that comes from community spaces. So, for example, Discord channels and Telegram channels and just hearing what people have to say. Again, because you can read a Twitter post and it'll say, yo, this is the next 100x, trust me. Or you can be in a Discord channel and someone will present, hey, have you guys seen this coin? And I'll be like, oh, cool. And then he just gives you like the whole rundown of why he thinks this coin is great. And then all of a sudden, someone else jumps in. He's like, oh, shit. Now that you mentioned that, there's this going on. And then you're putting two and two together and you realize, like, holy shit, we might be onto something here. As opposed to just looking at the latest crypto Twitter post telling you that, like, for his name, I won't mention. Let's just say his name rhymes with Hit Boy. Okay, maybe that's too obvious. But anyways, so the way he comments is he'll show you a coin and not give you any reason whatsoever. Whereas these communities, you can actually build, ask questions, get a response, and for the most part, people are not trying to make anything off of you. They're just wanting to share information with you because, believe it or not, people genuinely just like sharing information. So by participating in Discord channels and Telegrams, you can get a lot of information. That's an ability that we have. I initially only used Telegram as a messaging chat. Then I realized that there's so much more to it, all the channels, etc. I wasn't really a big Discord guy until recently either. But in my document, I share some really valuable Telegram channels, and then I share also some really valuable crypto channels. And remember, it's not about the number of members in a group. Sometimes people will join a group and they'll see like 30,000 members, 40,000 members. Oh, this must be the shit. I'll tell you why it's not. For the most part, it's probably bots. Probably a shit ton of bots in that channel. And you can usually identify Telegram bots. And we'll talk about this when we do the account security class. I don't want to get into this too much, but you can identify Telegram bots because they usually always have a first name, last name. So it'll be like John Smith, and they always have like a profile picture, like a normal profile picture. And it's like, that's not a crypto person. Like, you already know. A crypto person has like Donald Trump or like a cat or like, like a Pepe on their profile picture. And I'm not saying that there's people who don't put their regular photos. I'm just saying that when you have 20,000 people in one Telegram channel and 10,000 of them are like Jane Doe and like all these random like basic names and random photos, it's probably bots. So you want to steer away from channels like those. Quality over quantity. Join a channel, get in there, see what people are saying, look at the past posts of what people have already talked about and see if it resonates with you. If it doesn't, then maybe, it might be too advanced or it might be too elementary. If that's the case, then maybe the channel's not going to work for you. But you don't know until you try. Spend some time in there and don't worry about how many members are in that channel, because those channels that I mentioned with the 40, 50, 60,000 members that I told you to avoid, at one point they only had 10, 20, 30, 40 members. And usually the quality tends, from my experience, to be best when the channels are smaller, because once you start to get to these large groups, there's usually some sort of monetary or shilling financial gain that the devs or the leaders sort of see by capitalizing on the members. Because don't get me wrong, having 40,000 members in your group is a pretty good thing. There's a ton of things you can do, but I find that it gets to the point where the want to capitalize on the opportunity becomes greater than the want to share information with others. Yeah, I have a document. It will be readily accessible at all times, and it includes about 3 or 4 different Discords that I use and about 4 or 5 different Telegrams that I use. Again, not very big, um, but quality content. Like some of the best articles I've read that and what I do is every time I get one of those articles, I share it. I share it right away. I read it and I'm like, man, this is good shit. And I'll go on my Telegram and I'll send it to 7 or 8 different people. Are they gonna read it? I don't know. Maybe, maybe not. You can only show someone the door, but it's up to them to walk through it. But with all this information that's available, there's just so much opportunity for success.
Yeah, I really appreciate it. If anyone's got a question, speak now or forever hold your pieces. Until at least till next Friday.
Yeah. Yeah, exactly.
Hello, hello, hello.
Yes, DABiD. Thank you again. Last week was awesome. This week again as well. But yeah, we still want to know where to buy it.
So what we'll do is, if it's okay with Dustin, when we do talk about a certain coin, if there's some sort of highlight or transcript of the channel, we'll provide a CoinGecko link to that coin that we talked about. But we won't provide any, financial advice on those coins. We'll present it because I know sometimes you might hear a coin and then you try to Google it and then or type it into CoinGecko, and there are so many other coins that have similar names. So obviously we don't want you to be looking into the wrong one. So the least that we can do is provide you with the CoinMarketCap or CoinGecko link. But at that point, you're kind of on your own. If you want to get some clarification or anything like that, it's very important that we draw a line between in being informative and then providing financial advice.
Would it be easier, or would it be
Appreciate it.
a
Thank you.
better
worries, man.
choice? Would it be more wise to give them the Telegram link instead, and then they can go from there?
Yeah, you can do that as well. Absolutely. As long as you're getting the right info. So the reason why I like CoinGecko is because there are a lot of scam Telegram groups. And sometimes these scam Telegram groups have more members than the actual legitimate. So if you're getting a direct message from somebody you trust and they're providing you with the link to the Telegram, it might be the right one. There's always a possibility that that person was fooled and they're sending you a scam link. But from going directly through the CoinGecko or CoinMarketCap page, it links you directly to their official Telegram, Twitter, Discord, etc. So again, it's like the starting point, and you can sort of go from there, and you don't have to worry as much about running into the wrong link when you start from the CoinMarketCap or CoinGecko page.
You're right. I didn't think about that. Let's do that instead.
Yeah, and I mentioned when we do account security next week, man, like it's good. It's a dark class. It's very dark in the sense that there's a lot of people out there trying to steal your money. Just like in real life. And in crypto, it can be a lot worse because once your funds are gone, they're gone. And there's this element to online theft where people are so detached from what they're doing that they have no emotion. And when it comes to theft, if they want to take 100 grand from you, they'll do it in a heartbeat. And so the goal is to be as secure and diligent and assertive as possible when you're conducting transactions in the cryptoverse.
Man, I almost wish you taught that class this week because I've got my wallet coming. It's in the mail.
Nice.
Should have been here already.
It's okay.
My
It gives us
ledger.
Yeah, I'll come up with a really good one for next week, just for you, man. It'll be
Yeah,
it'll
my
be a great
ledger.
class.
I'll have
Yeah.
it.
So you went with the ledger. All right, not bad.
Yeah,
I have a
I
ledger.
did.
I have a ledger as well. Did
The
you get
Nano
the Nano
the
S or
Nano
X?
X.
X? You got X? Okay, you're a baller. Yeah, you must have a lot of crypto. Yeah.